Welcome to Matters Financial and Geopolitical from the Frontier. Thank you for stopping by. I hope the week's gone well. It's getting very warm in Nairobi now. We have this El Nino weather system which has kept it raining throughout the last 12 months, but it's now pretty warm. Home thoughts. I finished reading Ishiguro's book, and I like this quote from a New Yorker, which then actually panned the book rather unfairly, I think. But this is the quote that I thought was very reflective of his writing style. Writes a prose of provoking equilibrium, sea level flat with unseen fathoms below. He avoids ornament or surface and seems to welcome cliché, episodes as bland as milk, an atmosphere of oddly vacated calm whose mild persistence comes to seem teasingly or menacingly unreal. I like this photograph by Richard Vines of Bloomberg, a dish of noodles served at the Tonkotsu's restaurant in Notting Hill district of London. Looked pretty tasty, as did this bone marrow dish served at 45 Jermyn Street in London. I went back to Adam Curtis and I saw this description: a pastiche of found footage and iconic pop music. The film weaves together a narrative that has the power to suck you in, chew you up, spit you out. The link for that is on Rich Wrap-Ups. China, as we know, has deployed 8 surface-to-air missiles on a contested island in the South China Sea. Business Insider. And I think China is now asking the pivot to put up or shut up. That goes back to my article from the 2nd of December 2013 when I said the pivot to Asia bears its fangs. And I said then, given that the trajectory is one of gradual erosion of that decisive advantage, leads me to the view that this pivot to Asia has a logic and momentum of its own. Therefore, I see the US being increasingly determined to press its advantage. One might even posit that calming down the Iranian front allows the US to better concentrate its energies on the pivot to Asia. Satellite images taken on 14th February appear to show batteries of 8 missile launchers in our radar system on Woody or Yongxing Island in Paracel. So this is now becoming a serious challenge. Let's see how it develops over the next few days. Turkey's capital, Ankara, was rocked by a deadly car bomb targeting military personnel. I concluded by saying the inferno might well engulf the fire starter, Recep Erdogan. A direct Turkey-Russia clash is a growing risk on the Syrian border. There's only one major group of combatants in the Syrian war that's backed by both Russia and the US, and now Turkey is attacking it. For a 4th day on Tuesday, Turkey unleashed its 55mm heavy guns across the border with Syria. Targets were Kurdish forces whose recent advance is a key part of the Russian plan to restore President Assad's control over Syria. The risk is of an actual Russo-Turkish military clash, which would then threaten to draw in NATO. For Turkish President Recep Tayyip Erdogan, 2 threats are unfolding simultaneously. In the short term, a Russian-backed Kurdish advance could cut supplies to the rebels that Turkey's been backing for years, increasing the chance that Assad will recapture Aleppo and survive in power. That would be the latest blow to Erdogan's policy in the Middle East, a region of growing economic importance for Turkey. He's already lost allies in Egypt and Iraq. Russia has been carrying out military exercises in the Black Sea area that are a signal to Turkey not to stage a provocation, according to Igor Korchenko. We have enough forces to bring Erdogan back to his senses if Turkey forces us to act militarily. Then I found this one line in a global research article. So keep an eye on the cessation of hostilities, because the real hostilities may be just about to begin. Asia Times: Saudi Arabia's obsession with removing Assad may prove self-destructive. Adel Al-Jubair called Assad the single most effective magnet for extremists and terrorists in the region, asserting he must be removed from office if stability is to be restored in the region. That's our objective, and we will achieve it, he said, unless and until there is a change in Syria. Daesh will not be defeated in Syria. It is interesting to note how the House of Saud is equating the necessity of defeating Syria's legitimate leadership with the defeat of IS. If the Syrian army, backed by Russia's air support, retakes Aleppo, they will be able to cut off potential supply routes coming from certain neighboring countries. They then can effectively corner opposition forces, which currently have more territory under their control than the Syrian government. This is a scenario that the House of Saud and the House of Erdogan are trying to avoid through their military provocations. It is an open secret that the so-called Arab coalition does not have enough military power to face the combined forces of Syria, Iran and Russia. While the Arab coalition has certainly failed in Yemen, where they did not have to face Russia directly, they hardly stand any chance whatsoever to fight and win the battle in Syria. What is, however, clear is that the Mideastern players are preparing a recipe of yet another disaster which might destroy them too. The Reality of Riyadh, very interesting piece by Simon Henderson. Saudi Arabia's strategic vision is, to put it bluntly, whatever is best for the ruling House of Saud. Saudi royal politics can be incredibly small-minded, and petty differences can have big consequences. With this in mind, the notion of Riyadh having a regional view which merits the label of being a strategy is generous at the best of times, and the last 12 months have not been the best of times. 12 months on, the price of oil has been slipping below $30. The war in Yemen, launched amid much popular enthusiasm in March 2015, is going nowhere. Meanwhile, the new monarch, King Salman, is showing his age, walking with a stick, and according to the New Yorker, when meeting Secretary Kerry, reading his talking points off an iPad. His notional successor is Crown Prince Mohammed bin Nayef, only marginally more dynamic, and said to be still trying to get over the shock of almost being blown asunder by a suicide bomber in 2009. Instead, power is concentrated on one of the king's younger sons, Mohammed bin Salman, the mere 30-year-old defense minister and deputy crown prince known as MBS, whose rapid climb is wholly a consequence of being his father's favorite. According to one niche follower of the Saudi royals, MBS is unsophisticated. This is meant as a compliment, reflecting MBS's non-Western education and preference for wearing sandals rather than Gucci shoes, along with his Arab robes. But MBS appears to lack social graces as well. Family law has it that King Abdullah once threw MBS out of his majlis, a semi-formal royal occasion notionally open to all. On another occasion, MBS asked a favour of the now dead, long-serving Interior Minister Prince Nayef, who told him to go away and clean up his style of doing business. That style, according to ambassadors in Riyadh, who can't confirm the anecdote but nevertheless believe it to be true, included on one occasion leaving a live bullet on the desk of a rival for a deal. So Saudi Arabia today is trying to unite the Arab world while countering Iran in Yemen, Syria and elsewhere, and also coping with an oil price which remains stubbornly weak. And the key individual, Deputy Crown Prince Mohammed bin Salman, when he is not espousing technocratic visions to the likes of Thomas Friedman, appears to operate as if he is a character in The Sopranos. I think this is the point I've been making for a while. The talent pool is so thin that decisions are being made now which I think are entirely counterproductive. I'll put up a photograph of Walid al-Mualim meeting with de Mistura, the UN envoy. Let's see what happens, but I think the cessation of hostilities is hardly going to be a cessation. Interesting article in the Asia Times about how Iran, Turkey and Saudi Arabia will not survive in their present form for another generation. Iran and Turkey face a demographic train wreck that will hit with full force in about 20 years. Depending on the oil price, Iran will run out of money, young people, or water first, but it will run out of all three in the foreseeable future. Turkey's Kurdish minority has twice as many children as ethnic Turks, so that it will become a majority of military-age Turks within a generation. Saudi Arabia will run out of money in 5 years at the present oil price, and its tumescent welfare state will collapse. The euro is at 1.1132, dollar index 96.77, Japanese yen 113.85, Swissy 0.9916, pound that's fallen to 142.92, the Aussie a little bit soft when I looked last year, 0.7143. Australia's unemployment rate unexpectedly rose to 6% in January, according to the Statistics Bureau. Goldman Sachs is predicting an interest rate cut to 1.5% this year. Indian rupee 68.405, fresh all-time low. South Korean won 1226.27, Riyadh 398.25, Egyptian pound 782.89, and the rand has made some more headway and is around the 1547 level. Dollar index, I'll put up a 3-month chart, but look at this data that came out yesterday. US core PPI plus 0.4%, highest in more than a year, 4 times forecast. Industrial output plus 0.9%, highest in more than a year, 2 times forecast. That is pretty strong data. Euro dollar, I'll put up a 3-month chart. Draghi has brought it down, taken the froth off. UK borrows 10-year debt at a record low, hat tip to Holger Scheipitz for that. The Dow Jones had 3 straight days of more than 200 plus point gains. It's never done that before. Gold, let's have a look at where that is, back above 1200, 1206.15. Crude oil, that came right back. Last trading, US crude oil $33, and Brent just below 35. It's obviously got a little bit of a short covering bid on news that others also were trying to see if they could fit into this Russia-Saudi Arabia output freeze deal, but I think we're going to be headed lower because I don't see the current surplus situation being corrected anytime soon. S&P downgraded Saudi Arabia, now sees current account deficit as 14% of GDP in 2016 versus a predicted 6% in its October review. Venezuela has raised petrol price for the first time in 20 years. President Maduro said pump prices of premium fuel would rise from the equivalent of 1 cent a litre to about 60 cents a litre. So that's a pretty big hike. Venezuela has the cheapest gasoline in the world. He said the cost is almost nothing. That economy is now buckling under pressure, as I said on the 14th, as I said in August 2015, when I said the end is nigh for crude oil and oil producers from Caracas to Luanda, from Riyadh to Abuja. I said then oil-based economies are going to contract, currencies which have already collapsed are going to be routed, and Greek-style austerity will be the order of the day. The meltdown is coming. Let's move on to Africa. Al Jazeera tweeted some photographs of scenes from the Ugandan elections. Ugandans started casting their vote on Thursday to decide whether to give Yoweri Museveni, who's been in power for 3 decades, another term in office. More than 15 million people are eligible to cast their ballots. Given the skew that so many potentially first-time voters, this election probably represents the biggest challenge to President Museveni. Very interesting piece by Jeffrey Gettleman in the New York Times. Uganda firmly under one man's rule, dusts off trappings of an election. This is what I worry about, said Professor Kabumba, who spoke from behind his desk in a dimly lit office in central Kampala. Just beneath the facade of democracy is a real military government. The chance of a peaceful transition of power is slim to zero. But then he laughed. You see people walking around freely. He said, I can sit here and say these things. That's the genius of it all. It's like that movie, what's it called? The Truman Show. What point will people know this is like a TV show? That it's all being managed. President Museveni was my guest at Mind Speak in 2011. If you haven't seen that, do take a look. It was very interesting. Hannah gave the president flowers on that day, and I put up that photograph as well. The transcript of his presentation is also on the website and under the title Socio-Economic Transformation and Regional Political Integration. For Nigeria and Angola, the prospect of international loans offers a mixed blessing. Nigeria and Angola seeking international loans to help ease their oil pain. Investors are hoping that any loans will lead to a revision of their worrisome economic policies. It is a fact not lost on international observers. Asked recently what kept her awake, Christine Lagarde said she worries about the fate of low-income oil producers. And with IMF economists issuing fresh warnings that commodity shocks will weaken banks in developing countries, raising the likelihood of a commodity-driven financial crisis. Those concerns seem well-founded, indeed they do. No sign of an imminent oil recovery, notwithstanding the rally we've seen in the last 2 days. Producers are being forced to confront a new reality. Gone is the boom that lifted the fortunes of oil producers the world over, from Azerbaijan to Angola, Gabon to the Gulf. Instead, the next few months are likely to provide a stern test for some and a fight for survival for others. That is the case for Nigeria and Angola. Saying that the effect of the oil price has been devastating for Angola. Inflation has surged to 14%. The country's currency, the kwanza, has sunk to record lows. Unable to implement further cuts, the government seems helpless. Angola has been in discussions with the World Bank, is seeking $500 million. If finalized, the loans would likely be priced at low market rates, saying that they will also have far-reaching consequences. Packages will not come with the same strings attached as any IMF bailout. But the World Bank has recommended that Nigeria and Angola let their currencies devalue further. Both states have parallel currency markets, which really reflect the reality much better. They're not going to get enough money. They're going to have to call up the IMF, and that's the bottom line. African farmers struggle to feed continent's booming population. Interesting piece. The value of private equity transactions in Africa tumbled to the lowest level in 3 years in 2015 as the number of deals over $250 million shrank. South Africa's headline consumer inflation quickened more than expected to 6.2% year-on-year in January, compared with 5.2% in December. So I think the market, particularly with Iran, is now pricing in a further tightening. South African all share crossed 50,000. It's down just 1.29% this year. Dollar Rand obviously performing better because of the inflation spike. Barclays Bank PLC is set to debate the future of of the Africa unit this week. They've operated for almost a century in Africa. Pre-tax profits slipped 7.7% in the third quarter, reported a return on equity of 9.7% in the third quarter, below the bank's target of at least 11%. It'll be a great shame if they unload their Barclays position. Egypt, EGX 30, down 15.11% year to date. Nigeria, down 16.01% year to date. Ghana Stock Exchange Composite Index minus 0.09% year to date. Kenya sees 2016 tea export earnings of between 115 and 120 billion shillings. I wrote on the 8th of Feb, in my experience, when Kenya's farm economy performs, it has a big pull effect on the whole economy. And I was speaking about last year, where our exports actually rose 24% in shilling terms, largely thanks apparently to a 58% jump in the value of tea exports as prices rose. Kenya has seen rainfall increase as a byproduct of the El Nino phenomenon. We got lucky with that. Interestingly, the soft commodities complex has held its value and has not been part of the extraordinary and non-linear price collapse witnessed in oil and other industrial commodities. On the 8th of Feb, I also wrote that Kenya and East Africa is on the up as the rest of sub-Saharan Africa slumps. Kenya's shilling is at a 6-month high, 101.795. Nairobi all shares down 3.99% year to date. NSE 20 is down 5.58% year to date, but jumped 0.68% yesterday. The Pivotal Property Fund has bought 50% stake in the Buffalo Mall in Naivasha for $4.4 million. The Nairobi all share ticked lower yesterday. The NSE 20 bounced. Big movers yesterday. The banks were reasonably strong. Barclays up 1.2%, Diamond Trust up 0.5% to close at a 2016 high. Diamond Trust is up 7.486% this year. CFC surged 8.9%. Bamburi Cement, its heavy volume, closed unchanged at 180. Seen elevated volume action in 2016, plus just 2.857%, that considerably outperforming the benchmark indices. Cement consumption surged 10.7% through Q3 2015. That's probably underpinning the move in Bamburi. They said they did well supplying cement to the SGR. Kengen up 2.34735% yesterday. It's bounced pretty meaningfully since hitting a record low, but it still has a 1 handle on its PE ratio, and therefore there's plenty more to go to the upside. Once again, thank you kindly for stopping by.